In this video, I will be comparing three different ETFs: JEPQ, JEPI, and SCHD. And I will also share my favorite pick out of these three ETFs. Before diving into the details of the comparison, let me first introduce this channel, Crowd Peak Investing. So this is the channel where I will be investing my real money based on your comments or YouTube comments. Yes, you heard that right. So every week I will be investing $500 or at least $500 for this entire year of 2026. That totals to 26,000 US dollars of real money. And where will I be investing that? That depends on your comment. You can comment the ticker of any stock or ETF, for example, Apple, or ETF like VOO, or ETF tracking gold or silver or Bitcoin. Your comment with ticker in it will be counted as a vote, and the ticker with most vote wins over a period of a week. For more details on this voting, you can check the video on the link below. This voting is a weekly process. So all your votes or comments with tickers from Thursday of this week to Wednesday of next week will be counted. And on Thursday of next week, I will be investing on the ticker with the most vote. And all the investment will be made public. So I will be sharing my portfolio with you. Please comment below with the ticker of your favorite stock or ETF and help me build my portfolio. Now let's go into the main topic of this video. Let's start with the key comparisons of these three ETFs. The first is JEPI, or JP Morgan Equity Premium Income ETF. This is a popular income-focused ETF that invests in large-cap US stocks while using covered call strategies to generate monthly income. It aims to provide a steady cash flow with lower volatility than the broader market. The next one is JEPQ, which is similar to JEPI but focused on Nasdaq stocks. It offers higher income potential tied to tech heavy companies using covered calls to generate monthly distributions with more growth exposure than JEPI. The third one is SCHD, or Schwab US Dividend Equity ETF. It's a dividend focused ETF that holds high quality US companies with strong cash flow and a history of consistent dividend payments. It's designed for long term income growth and stability rather than option based income. And the cash flow here is quarterly. Now, let's look into the more details of these three ETFs. First, the expense ratio. The expense ratio for JEPI is 0.35%, and for JPQ is also 0.35%, and for SCSD it is 0.06%, which is the lowest among all these three. If we look into the yield or the return over the last 12 months or for the year of 2025, for JPI it is 8.15%, for JPQ it is 10.13%, and SCSD is 3.74%. Again, the SCSD has the lowest yield among all these three, and JPQ has the highest. Next is asset under management. JPI has 41.52 billion of market shares. JPQ is 31.92 billion and SCSD 71.15 billion. SCSD is the largest, but all three are significant. For the holdings, JPI has 124 assets, out of which the top 10 holdings forms the 15.89% of total assets. For JPQ, it has 107 holdings and top 10 forms 43.8%. So JPQ is more weighted towards the top 10. For SCSD, it has 102 holdings and top 10 holding forms 40.43%. Again, SCSD is also more biased towards the top 10. If you look into the inception date, JEPI is relatively new. It was first launched in 20th May 2020. JPQ is even more recent. It was launched in 3rd of May 2022. Out of all these three, SCSD is the oldest one, with the launch date of 20th October 2011. Now, since JPQ is the newest here, and to make this comparison more meaningful, I'm taking some scenario here. So the scenario is $10,000 is invested in each ETF, and then the investment date is 1st of June 2022, so that all three ETFs were available, and all the dividends and incomes that are generated are reinvested, and no additional investment is made after 1st of June 2022, and all the positions are held. That means not even a small part of this ETF is sold. If you are enjoying the video so far, please consider subscribing to the channel. Your one click on the subscribe button helps the new channel like this grow. Now comes the most interesting part of the video, analyzing the annual returns. The year 2022 was a really bad year for whole stock market. Most of the things went down. But even in this year, JEPI had a positive return of 1.7%. JEPQ suffered a lot, minus 9.54%. SCHD minus 1.13%. But 2023, they all bounced back. So JEPI gave the return of 9.81%. JEPQ gave the return of 36.23%. That's a lot. And SCSD was slightly less than 5% at 4.57%. 2024 was again a good year. JEPI made 12.58% of annual returns. JEPQ gave the return of 24.89%, and SCSD gave 11.67%. In the last year, 2025, JEPI gave the return of 8.11%, JEPQ gave 15.21%, and SCSD 4.33%. So overall, JEPQ gave strong returns where it was always two digits in the year of 2023, 24, and 25. 2023 was impressive, 36.23%. The graph here shows how the portfolio balance amount changes over the time. After 7 months of investing, that is at the beginning of the 2023, the portfolio of 10,000 invested in JEPI increased to 10,170, so just a slight increase. JEPQ had a loss and the balance was $9,046. There was loss with the SCSD investment as well, and the balance dropped to 9,887. After one more year, or at the beginning of the 2024, all three ETFs had the increment. JEPI, the balance reached to 11,168. JEPQ, 12,324. In SCSD, $10,339. And after one more year, in 2025, or in the beginning of the 2025, JEPI balance increased to 12,573, JEPQ to 15,391. So there is a total gain of 53.91%. And for SCSD, the amount changed to 11,545. And this new year, or in the beginning of the 2026, now the balance changed to something like this, 13,592, or 35.92% gain for the JEPI investment, 77.31% of total gain in JEPQ, and around 20.45% gain for SCHD. Here we see if the $10,000 was invested in one of each ETF, then the investment with JEPQ gave the highest return and the total return of 77.31%. If we look into the last year return, or the return in 2025, JEPI gave 8.11% return, JEPQ 15.21%, and SCSD 4.33%. If we look over the last 3 years, then the annualized return is 10.15% for JEPI, 25.15% for JEPQ, that is huge, and 6.8% for SCSD. If we look into the annualized return for the full investment period, that is 3 years and 7 months, the JEPI gave the return of 8.94% every year, JEPQ 17.33% every year, and SCSD, the lowest, 5.33%. So if you have invested this $10,000 not in 1st of June 2022, but in the first day of 2025, Then over a year, you would have gained 8.11% in JEPI, 15.21% in JEPQ, and 4.33% in SCHD. But if you invested $10,000 in the beginning of 2024, that is for 2 years, then you had a total gain of 21.71% with JEPI, 43.87% with JEPQ, and 16.51% with the SCSD, with annualized return of 10.32, 19.95, and 7.94% respectively. If you invested this $10,000 in the beginning of 2023, then with JEPI, you would have a total gain of 33.65%. With JEPQ, 96.01%. So your money would have almost doubled. So from 10,000 to 19,601. With SCSD, the total gain would have been 21.83%. And the annualized return is 10.15%, 25.15%, and 6.8% respectively. All three ETFs serve different purposes. If you want aggressive growth, then JEPQ is a good pick, but there can be a wild swing. It's not always positive, it can go negative as well. If you want more stable and conservative, then SCSD is a good choice. And if you want a higher gain with some stability, then JEPI is a good choice. If you ask me, for this year 2026, I would bet for JEPQ. So my pick would be JEPQ out of these three. I can risk one more year in JEPQ and then see what happens towards the end, and then decide for the next year or in the year of 2027. And just to highlight that even we have the annualized return of positive all the time, there are the months where there is this negative return, and then there are the months where there is the positive return. So I'm showing you here the monthly performance over these 3 years and 7 months, so you see how the um, return is going up and down. That's why it is suggested to do the daily cost averaging. Thank you, and we'll see you in the next video.